Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, May 31st at about 1:30 p.m. Eastern. Well, U.S. inflation tracked sideways in April, a worrying sign for the Federal Reserve that suggests the elevated pace of price increases could last longer than expected, oh boy, and casts doubt on how soon the central bank will be able to cut interest rates. The PCE report from the Commerce Department today showed tepid consumer spending, a wrinkle that could either help the Fed's inflation fight or cause jitters if the economy cools too quickly. And now let's go on to three charts that could give us some insight into the week to come. As we usually do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. This is the exchange-traded fund that closely follows the benchmark S&P 500 index. Now, when I captured this chart today, the SPY right here was trading at $520.85. $520.84, excuse me, a few points below the May 21st all-time closing high at $531.36. This is a new all-time closing high. Now, we know that the SPY marched up its 20-day moving average, the red line, since its October lows, and those lows were down at 409 down here. It ran up to March 27th. Right here, ran all the way up the 20-day moving average, and you can see how it was using it, trading above the 20-day at a premium for quite a while, then going up this staircase. The SPY got a little more tired, kept getting a little closer to the 20-day moving average, a little closer, and that's typical. That's very typical. Then it ran up to the March 27th all-time closing high at that time. That was the closing high at that time at $523.17. And that was a 22% gain, and that was great. Can't complain about that. Now, from that high, however, the SPY lost its mojo. As you can see, it started coming down toward the 20-day moving average and began to sink, and finally sank down to below the 20-day moving average and the green line, the 50-day moving average, and sunk down to its April 19th low of $493.86. Now, from there, it struggled to move higher, as you can see, struggled, but made little higher lows. That's a good thing. That's what you want to see. Grappled with the 20-day, grappled with the 50-day, until May 6th, right here, when it finally hopped above the 50-day moving average to about $516. And it rallied from there to make another high, another all-time closing high, as we just said, on May 21st at $531.36. So from there, it's kind of lost its mojo again and has fallen pretty gently, not too bad, but has fallen today and down below the 20-day moving average today. And again, it's trading right now at $520.84. So what does all of this mean? It means we've enjoyed a sweet bull market. As I said, you can see this strong uptrend here, trading at a premium to the 20-day. Then price gets kind of worn out as buyers certainly holding it up and keeping that uptrend up, but some bears are taking the profits from the bulls here too. So what do? We evaluate the chart here and we say, okay, our resistance line here is going to be $533, $534, because last week's opening high, although it wasn't closing, did touch $533. We have potential price support here at the 50-day moving average, which is coming in again at $516. Call it $516, $517 right there. Interestingly, the trend line that I drew from the October 2023 lows up to and underneath the April lows comes in right here, just about exactly where the 50-day moving average comes in. So that's telling us that the 516, 517 potential price support area here is important. So we want to keep an eye on it. Then we can look for more price support down here at 500 and a little more down here at that 493 line, 494. The coming week is going to tell us if we have upside, more upside ahead, or if the SPY needs to maybe take a break, maybe broaden out, maybe consolidate into the summer months. So let's be smart and let's trade carefully. Our next chart today is a daily chart of the QQQ, symbol QQQ. Of course, this is the ETF that follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market. It's home to momentum stocks like NVIDIA, Meta, AMD, Microsoft, Alphabet, that whole group, Tesla. Now, as I captured this chart today, the Qs were trading at $445.97. A few points below its new all-time closing high at May 28th, just a few days ago. See this little candle that looks like a T here? That's the new all-time closing high at $459.68. Now, if we look left on the chart, we know that the Qs made a low in October at $342 because we had such high interest rates. When the interest rates started going lower, both the SPY and the Qs started going higher because, of course, the market does not love high interest rates. So the Qs climbed from $342 in a strong uptrend like the SPY, marching up its 20-day moving average. Now, the Qs are more volatile than the SPY, so sometimes they dip for a little bit longer, but they did a good job here and managed to stay above its 20-day moving average to the all-time high at that time on March 22nd. And it came in at March 22nd, a little tiny candle at $446.38. And that was a 23% gain, nothing to sneeze at. Then in April, like the SPY, weakness set in. The Qs dipped below, finally on this candle, they dipped below the 20-day. And then here on this candle particularly, it really dove below the 20-day moving average and closed below the 50-day moving average right here on April 15th for the first time since early in November of 2023. A few days later, the 20-day moving average collapsed. That was right here over the 50-day, which of course is a negative sign. And the SPY sunk to a low here of $413 on April 19th. From there, it struggled to move higher, but it did a good job. Again, little tiny higher lows. That's all we want. We want enough bulls coming in to get those lows a little bit higher. And then finally climbed over the 50-day on May 6th to 440. Then again moved up to its new all-time closing high on May 28th to 459.68. From there, it fell to its current price, again, where we noticed it today at $445, call it $446 to make it easy. So now we have resistance up here at 460, 461. We have potential price support here at $440 at the 50-day moving average. Then let's look at this trend line I drew from the October lows up to the April lows, and using that, we stretched it on out here to this point, and we can see that it's telling us that 430 is another area of potential support. So again, we have April lows again at 420. We've got this trend line at 430, April lows at pivot points at 420 and what am I saying here? May pivot, I should say, at 420 and April lows at 413. So those are all potential support. Of course, to remain in a strong bull market, we want the Qs to stay above its 50-day moving average. Don't know if it can do that or not right now. But something that I checked made me be aware that I need to watch it. If you back up, as one of my teachers used to say, back up and look at the big picture. I backed up here in my chair and looked at this chart and noted a difference in, and this happens every year, a difference in the volume between, look at the month of May on the daily chart here, look at the volume spikes here, and then start looking left on the chart to April, March, February, January. Notice how the volume spikes there, by and large, were much higher than those in May. And this is the time of year when traders take off and go on vacations, just like the rest of us try to do at any rate. So volume is important, and we just want to note it here and keep it in mind. I see it softening up a little bit. So we could see a consolidation in the coming week. And please remember that a consolidation or even a quick pullback here is going to offer us new trading opportunities. So that's the good part. So consider keeping some powder dry and keep an eye on your protective stops. Our third chart today is a daily chart of the Invesco Wilder Hill Clean Energy ETF, the PBW. The PBW has 73 holdings. Top holdings include First Solar, Fluence Energy, Ameresco, and Bloom Energy. Now, when I captured this chart today, the PBW was trading at $22.84. If you look at a long-term chart, I always like to check monthly charts just to see what's really happened and what the price history is. And if you look at a long-term chart, you will see, it's not on this chart, but you will see that the PBW is interesting. It actually made an all-time high in February of 2021 at about $138. Wow. So we thought clean energy was going to be the charm, and however, from there, much of the time, it fell in a downtrend. Of course, it was a brand new, pretty much a new industry, and it fell and fell and fell. I'm going to call it down to this April low, at least so far, this April low on April 22nd at $18.93. Now, at least for now, the PBW started moving higher from there and finally moved above the 20-day moving average right here, and the 20-day crossed over the 50-day, which is a good thing. It's a good sign. And to where it is today, again at $22.84. Now, just sitting back here, I like the looks of the setup. Don't know if it'll stay above the 50-day or not, but that's what it's going to have to do if I'm going to put money into it. So I like that setup. I also like that I backed up here, and there is evidence here of stronger volume than I've seen in earlier months. So that I like. We can see a couple of pretty decent spikes here, even a couple of decent spikes in April, but not as good as May. May seems to have a little bit of buying coming into it. Don't know if it'll hold up, but at least for now, I'm looking at it. So if price behaves and May remains above the 50-day moving average, which is coming in now at $21.58, right here, $21.58. If in the coming week the PBW stays above the 50-day moving average at what I just said, $21.58, I will add a small position of the PBW to my trading portfolio with a stop, and I'm going to put the stop down here at $20.94. If and when the PBW, and I'm going to say 26, but you can use an earlier number if you want. If and when it can rise above $26.50, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the PBW in the coming week. And now, here's some news from ToniTurner.com and a number for you. We've lowered the price of all of our online training programs to make them more accessible to everybody. For example, we've lowered this very popular program right here. We've lowered the price of how to swing trade successfully from $180 to $187. It's a 2-hour, 47-minute course of training that you can watch at your convenience, and it shows you how to trade with my sleeping tiger setup, which I've taught for years, and strategies that I've used for years, and actually I still use every day to trade myself. So if you'd like to become a more profitable trader, now is a great time to check out my training programs, from our ever-popular 7 Steps to Successful Trading, of course, to a favorite, Swing Trade Successfully, down to Trade the Trend to Profits, how to read charts, great for for novices, 3 winning setups, also a really good short-term training and inexpensive, how to bottom fish like a pro, which would be nice if we're starting that today. Find out how these timeless online programs can help you earn more money quickly and easily, and again, they're all discounted. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.